You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
We believe in the big picture story, and we're investing for now is the likelihood, in our minds, near certainty that gold and silver price is going to be much higher 3 years down the road or whatever. So we shouldn't really worry about it day by day.
Thanks for tuning in to Mining Stock Education. I'm your host, Bill Powers. And in today's episode, we're going to be touching base and hearing from Brien Lundin. He is the editor of the Gold Newsletter, which has been around since the United States went off the gold standard. And he is also the host of the New Orleans Investment Conference, which will be a hybrid version this year. There is the in-person possibility if you want to head down to New Orleans towards the end of October. Brien's going to be sharing about that. But in the meantime, Brien, let's start off with investor sentiment in the junior gold sector. You've been at this many more decades than me. So how do you deal with the ups and downs? We've been experiencing some downs this summer in terms of our equity in the junior gold stocks. How do you deal with this?
Well, Bill, despite the fact that you prefaced this by saying I've been involved many more decades than you have, I've been in this game a long time, and I'm still learning how to deal with that. I was joking or laughing at myself today in between phone calls. I looked at the gold price maybe 5 times in the span of about a half an hour, and caught myself saying, why in the world are you doing that? We believe in the big picture story, and we're investing for now is the likelihood, in our minds, near certainty that gold and silver price is going to be much higher 3 years down the road or whatever. So we shouldn't really worry about it day by day, but we do. Now, first thing, of course, is you should never invest in this sector on margin. And if you do that and you are only investing money that you can afford to lose, or can afford to lose without changing your lifestyle dramatically, then you're okay right now. This is a cyclical market. You're going to get through this. The trends will come back in your favor. The times to worry about portfolio management aren't when the market's down, when you can't really sell your positions anyway. The old saying, sell to whom? There's nobody out there to buy them. So it all just dries up. So you just have to get through the drought and weather the storm, yada, yada, and then wait for things to turn. Now, when everything's rocking and rolling, that's the time where you really need to worry or be concerned about portfolio management. That's when capital gains flow like, rich income. There's just a stream of gains that potentially on paper are flowing by you. And that's when you need to worry about taking some of those gains, dipping a ladle into that flow of capital gains and taking some money off the table, out of that market, and putting it aside. You have those opportunities in the good times in these sectors, in the sector, and you need to really take advantage of it. But right now, you can't really worry about it. Now, again, I say that, and I'm still trying to figure out how to do it myself, because I do find myself checking the market over and over and over again. And you really shouldn't. And it's a lesson that, even I, after being in this sector so long, learn every day.
And Brien, one thing you shared with me in a previous interview is that, Bill, after you capture those gains, get them out of your account so you don't spend it on something else, especially if we might be towards a peak. You want to exit the bull cycle with profits in your personal bank account.
Yeah, if we're involved in the junior mining game, okay, we believe in the big picture story, the macroeconomic picture, et cetera, et cetera. But, we're romantics at heart. We love a good story. We like that story of discovery. And if you sell a big winner and you leave that cash in your account, you're just going to fall for the next story coming up. And because this is a cyclical market, a lot of those stories come by near the top of the market. Or the top of a cycle. So you really want to get that out and get it at least 2 steps removed from going back into the market. One of the great places that I find, you can still believe in the macro story, one of the great places I find to store cash in an account now these days is in, say, the Sprott Physical Bullion Trust, gold or silver. I put some in the silver trust back in, I guess, April of 2020 as just a cash holding account. Within a couple of months, it had gone up 80%. And I'm like, that's not bad for cash earnings. Of course, it's gone down a little bit, but since then, but still, it's ahead of the game. And I put that away as cash, and I haven't liquidated any of those silver holdings, that silver trust holding yet. It's just still sitting there.
Brian, there are many that are saying right now, and I agree with this point, that if you're going to invest in a small microcap junior resource stock now, do so in one that's financed. But the flip side of that is also sometimes a financing could be a catalyst. So in your view, would it be good perhaps to look for a good company with a good project, good management? Maybe they don't have money, but if we do believe that this is a near-term cyclical bottom that we're experiencing right now, do you ever speculate in that regards to where the financing actually is the catalyst for a 200% move a lot of time in these stocks?
Well, that's typically the case in as a drilling season comes up. And if a company is sitting there, has a great prospect and no money in the bank, and they can do a financing and then explore that, get the drills turning. Actually, nobody's really interested, or the market's not really interested in surface sampling results, et cetera, et cetera. They want to see the drills turning. So if a financing gets a company with a great prospect and gets those drills turning, that could be an opportunity. You do have to watch share structure. If they have to raise a lot of money and it's very cheap. If they double their shares outstanding on a financing, it's going to be really tough to go anywhere anyway, even with putting that money to work.
In regards to share structure, what's your sentiment towards the Australian companies where they have no problem issuing 1 billion shares, whereas here in the States, we don't like to see it over 200-300 million?
Yeah, my mind just doesn't handle those big numbers that well. So that's one of the reasons why I tend to avoid that market. It's just completely different and hard to gauge how a company can advance with that many shares out. It really has to eat through a lot of stock. It has to, not that there aren't successes. Obviously there are, and obviously the Australian market led the North American markets by a lot in this cycle. So there are successes there. It's just alien to me when you have that much stock out. And I rarely recommend Australian stocks for that reason. Also, because unless you have really good ears and eyes on the ground there, you're going to get fleeced. So I avoid that and try to stick to my knitting where I know just about everybody involved in the industry.
What percentage of your own portfolio would be in producers right now?
Not an awful lot. I would say for the junior mining portfolio, less than 10% for me. I don't really cover the producers. I think that they're a good value right now, very generally speaking, especially the mid-tiers that also have the potential of some M&A affecting them or being a catalyst for them. So I don't begrudge anybody holding producers right now. I just don't follow them quite as much as the junior exploration and development sector.
Goldterra Resource Corp is a gold exploration company that has assembled a highly prospective district-scale land position on the doorstep of the city of Yellowknife in Canada's Northwest Territories. Goldterra is currently focused on expanding and delineating gold resources at the company's Yellowknife City Gold Project, with a goal of discovering over 5 million ounces. With ready access to infrastructure and multiple high-grade gold discoveries, Goldterra is on track to re-establishing Yellowknife as one of the premier gold mining districts in Canada. Goldterra trades as YGT in Toronto and YGTFF on the OTC. For more information, go to goldterracorp.com. That's goldterracorp.com. I've listened to a couple arguments for why when the Fed next raises interest rates, that's probably the next key catalyst for gold. And one of the arguments is that when that happens, general equities would turn over probably at least 20%. That would cause fear, and then the fear trade would drive the price of gold. What do you think of that argument?
I agree with the conclusion, not necessarily the logical path to get there. What we've seen, and I have to remark that back in December of 2015, I called the end of the bear market in gold. And ahead of the Fed's expected rate hike, initial rate hike, that December, because I looked at that as releasing the selling pressure. One of the things we see in trading and in investing is the typical buy the rumor, sell the news phenomenon. And that's what happens in the paper gold and paper silver markets. They look ahead to see what's the next big announcement or move by the central bank. And they bet on those headlines and those events. The markets are absolutely addicted to monetary policy right now. Fundamentals do not drive the speculative end of the market. So it's all based on how much more monetary adrenaline are we going to get, or what announcements in that regard are we going to get. So gold fell from 2011, 2012. It peaked right when the Fed announced unlimited QE, QE3, QE infinity, as long as it takes, to whatever degree it takes. And amazingly, gold peaked at that point. Instead, you would think it would take off from that point. But the speculators looked ahead and realized that the next big announcement coming from the Fed was going to be the end of quantitative easing, tapering. So they went ahead and exited the trade, and gold fell from that point on and kept falling as speculators went in on the short side, anticipating the next big announcement from the Fed of rate hikes. Once the Fed had actually accomplished rate hikes, that was almost exactly the bottom in gold. And we had 6 months going into 2016 of really powerful gold and silver market, and made a lot of money in that market. And the juniors took off as well for that 6 month period. So yeah, I think that factor is going to happen again. And it could happen this time around, could kind of rhyme this time around, in that the announcement of tapering could be the launching point rather than actual rate hikes, because I think there's still some skepticism that the Fed will actually be able to raise rates even a bit. But it looks very likely, if you read the current tea leaves and trial balloons being floated by Fed officials, that maybe next month we're going to have the announcement of tapering. That could be the launch. If you look at some of the technicals, it looks like that's about the time where we could see a reversal in gold's downward momentum and going up again. So that could be a key catalyst. It could be the first rate hikes at some point when they occur, but I still think those are pretty far down the road if they happen at all.
And do you expect silver to lead gold even this year if it plays out like that in about a month?
Yeah, this is a monetary-based bull market. Obviously, it doesn't feel like a bull market right now, but again, looking at the big macro picture, we are in a long-term secular bull market. And in one that's based on monetary factors, and really that's the only kind of bull market in metals that lasts very long, but one that's based on monetary factors, monetary concerns, concerns over the valuation or potential devaluation of the currency. Silver always leads gold, always has at least, and I would expect it to do so again. So as I always say, if you like gold, and you should love silver.
And any thoughts on Bitcoin and Ethereum? Are you still staying out of that trade, or have you dabbled in cryptocurrencies at all?
Still staying out because I missed it, so I have that emotional hurdle to get over as well. I just know that I'll get in at the top. But yeah, that's part of it. I am completely in line with the philosophy, or the original philosophy, for cryptocurrencies, that being some level of independence from the government, from government watching over your personal decisions and finances, from the mismanagement by central banks, et cetera, et cetera. But I'm afraid, and this may be the fact that I'm not in the trade biasing me to some degree against it, but I'm afraid that the emergence of central bank digital currencies, and the fact that the crypto universe is trying to run to the cover of regulation and go mainstream, that a lot of those advantages of cryptocurrencies are actually vanishing. and that once the central banks have their own digital currencies, they're also going to steal an important use argument for cryptocurrencies, that of clearing transactions, because everyday commerce and consumers will more likely use the Federal Reserve's digital currency to clear their rent payments, their trips to Walmart, et cetera, than they will Bitcoin or Ethereum or whatever the latest digital or cryptocurrency du jour may be. So that will steal some of those use arguments from the cryptos. And without those underlying use arguments, then a lot of the appeal falls away, especially if that market is highly regulated.
But as a libertarian, you would like the privacy aspect of it and perhaps some of the sound money argument to it?
Absolutely. I do think, though, that the cryptocurrencies have stolen some of the speculative demand from the metals for those reasons, but I don't believe that they've stolen much, if any, of the safe haven or wealth insurance demand for metals. That involves shifts, broad and large shifts in portfolio allocations, as opposed to simply trading and expecting to be able to sell to somebody else at a higher price down the road.
So, Brien, your conference is coming up in about 2.5 months here. What should we expect? Will you be covering Bitcoin or just gold, resource stocks, and libertarian political ideology?
All of the above. A bit on Bitcoin. I am focusing a lot on some of the best thinkers out there, in my view, on macro. It's really been my wish list as somebody who spends a lot of time on financial Twitter, who really is kind of a fanboy of some of the people who are out there commentating these days. I've gotten my wish list and I've gone down, and there's really only one or two on that list that I have not been able to get to come to New Orleans this year for some reasons. And it is an incredible list. I know I'm going to forget people, but I urge everyone to go to MiningStockEducation.com. And if you don't recognize some of these speakers that we have lined up, Google them and you'll see why they're coming. Just brilliant minds. We've got Ron Paul, of course, as a headliner. We've got Grant Williams, James Grant, of course, Rick Rule, Peter Schiff. We've got Peter Bookvar, Tabby Costa, George Gammon.
The real estate guys, are you covering real estate again this year?
Absolutely. The real estate guys are going to have a big focus here. They're fantastic. So we cover that sector very well. We've got Jim Iorio, Dave Collum, Brent Johnson. The list goes on and on and on. It's a truly amazing one. Doug Casey, of course. And again, just whoever's listening to this, go to NewOrleansConference.com and take a gander at this dream team that we have. It's really going to be a spectacular event. I'm confident that the Delta variant will have burnt off by then, knock on wood, fingers crossed. And thus, everybody's dying to get back together, and we'll be able to do so here in New Orleans in a safe fashion. So it is going to be a real blockbuster, something people are going to be talking about for years and years.
And you're incorporating last year's version as well, right? For those that can't get to New Orleans, you're also going to do a virtual conference or streaming, live streaming?
Yeah, streaming. We're going to pipe out a lot of content. We're going to do some innovative things, have some roving cameras going around the conference during breaks that people can tune into and see what's going on and feel like they're there. But I would encourage people to make their plans to actually come to the live event, the in-person event, because there's nothing beats being there and being able to buttonhole some of these speakers and ask them your questions and meet them. And really, and also run into the other speakers. There's only so much you can do virtually. But when you talk to these other, when I say speakers, I mean the other attendees, these are really smart people, and they're all willing to share their views and ideas and hot picks, et cetera, et cetera. So you can gain as much from talking to your fellow attendees as you can from the actual speakers on the podium. So it is an extraordinary experience. And no matter what happens, if you register now for the in-person event, we have a full money back guarantee. So if something happens, you're worried about COVID, you don't want to travel at the last minute, don't worry. We can give you a full refund or roll it over into the virtual event. and give you some money back. So whatever you do, I would advise you to go ahead and try and register now, because there is a strict limit to the capacity of the hotel. We have a strict limit on the room block. The hotel's sold out past our room block. So it's important to reserve your place now.
And you're one of only a few really resource conferences that is actually meeting in person this year, I think, too. I know of only one other that I track.
Yeah, and we are, if not, one of the few, if not the first, really big one. Or what we do, I think we're the first. And it's always an incredible experience. The intellectual energy in the halls at the New Orleans conference, it's really a kind of a destination event. Everybody's in the same place, listening to the same speakers, but still getting a myriad of views from people who are more libertarian / conservative oriented. It's really a incredible experience in person. And this year, with everyone dying to get back together again, it's really going to be remarkable.
Excellent. Well, Brien, thank you for sharing about the conference and for your insights on the market. And I look forward to catching up with you again in a few months.
You got it. Thanks so much, Bill. Always a pleasure.